I'm off to a good start.
That's
She's
right.
not gonna let me get away with that.
Yeah.
She gonna get me, y'all, before the show's over. So I know it is.
I saw that last week.
Yeah, I know, right? Exactly.
Yeah. You know, so I'm gonna go ahead and get the housekeeping out of the way. Speaking the Facts with Charlie and JR is brought to you by Kiss Wealth Now.
Yes.
Taking care of all, not half, not some, but all of your commercial real estate needs. Tell them how to get in touch with Kiss Wealth Now, Charlie.
So Kiss Wealth Now is very accessible 24/7. So you can always go out to the website, Kiss Wealth Now, all together. Or if you like to call me now, that's going to not be 24/7. Like I got to sleep, right? But my number 214-738-4913. You can always send a message. And we definitely are here to serve you and create a custom mortgage that's going to fit your family's budget, whether or not it's your residential home or even a commercial property. We definitely want to help you create a legacy because, again, where you live is not just where you live, it's your future. So we definitely want to be a part of that. And as we always say, your health is so important because if you don't have your health, there is no wealth.
So it's also brought to you by Kiss Health Now, because we gonna keep it healthy, keep it active, and keep it moving around these parts. You know what I'm saying?
And healthy, yes.
You know. So I want to go ahead and acknowledge our altar.
What is it? What is it again?
I know. I want to acknowledge our.
That's an elderly
I told you she wasn't gonna let me get away with it. I want to acknowledge our alter egos. The fly guy and the fly girls. I am, of course, don't call it a comeback because I've been fly.
That's right.
Over there is Fly Money, and in the back, our producer taking care of things, Kim, aka This Shit's Fly. What's up, Kim? Hey. And we got Bryce over there on the knobs and faders. What's going on, Bryce? We got we have an audience in the back. We have a couple of distinguished gentlemen in the back. You know. We got Billy and Mo in the back. What's up, brothers?
It's all good.
You know, see that.
And they served our country, so they're veterans like you.
That's right. So that's right. So
that's right.
Yeah. So we representing up in here. So I don't feel quite so alone. See, when I get picked on today, I might have a little help.
So you say there's some seniors back there?
Yeah,
too?
you know what I'm saying.
Wow. She finna get jumped on about the senior thing now.
You know, because every week she get me. But without any further ado, I'm gonna go ahead and let Charlie introduce our distinguished guest for the week. This is like old home week. This is family.
I know. This is family.
Yeah.
So we are honored to have Andrea Filer here. And we've known one another for probably 20 years now. I feel like a long time. And so I've watched you level up in so many ways. You're always a boss, but just, yes. And, so the purpose today, we definitely want to talk about her new business. One thing that we do here at Speaking the Facts, we want everybody to come in and talk about what they are the expert of.
Okay.
And you've always been an expert in everything you've touched. Everything you've touched, you've grown, whether not it be energy, right? Or obviously mortgage, or real estate, and now the Home Buyers Coaching Club.
Absolutely.
And there's some businesses in there that I know I forgot that I didn't name. Right. Some trading, some different things. Tupperware. Did you do Tupperware?
No, I did. That one I missed.
But you missed the Tupperware train.
I missed the Tupperware.
But she's done all
the makeup thing.
Got the makeup.
Mary Kay, beauty control.
All of them. Yes. So she is the epitome of a serial entrepreneur.
There you go.
And so we are so glad to have you. Also, she's a wife, a mom, a grandmother, all the things. And meanwhile, she's keeping, look at gorgeous hair, no stress, work-life balance, right?
Okay. So don't call it that.
Yes.
For the sake of our audience.
For the sake of our
audience. But with that being said, we wanted you to come on today, talk about you, introduce the audience to you, because I know you, but introduce the audience to you and then talk about your new business venture that we're so excited about.
Okay. Well, thank you guys for letting me come on tonight and just share your audience and share your space to just talk a little bit about what we have ventured into in this season.
That's right.
I have started what is called the Home Buyers Coaching Club. And what the Home Buyers Coaching Club is, it is an online platform for those who are interested in becoming mortgage ready. Now, the difference is that you are able to have a dedicated coach. You're able to get the education that you need in a self-directed platform. That way you don't have anybody over your shoulder. You don't have anyone pressing you for time. You don't feel like you are wasting anyone's time, and you don't have to be anywhere at a certain time.
That's right.
So you can do it at your own pace. We have 5 different courses that you're able to take, but this is the cool thing. You can earn up to $1,000 in closing cost credit just for completing the courses online.
Which is
wait, say that again. I don't think that hurt.
I know. That's the part for getting yourself educated in the home buying process,
For helping yourself,
which is going to make the whole process more exciting and fun, because now you understand the crazy language that we speak with the DTIs and the LTVs and all those different things. And you understand what it takes, what credit, how lenders look at your credit, because how you look at your credit and how you think we should look at your credit is a whole lot different than how the lenders actually look at your credit.
That's right.
We talk about contracts and negotiations. One big thing is we talk about the role of the realtor.
Yes.
People have a misperception about what the realtor is supposed to do.
We got like preach. We got somebody saying preach in the background.
I can say from the outside looking in that realtors in the real estate profession, they're not quite as bad, but they're almost looked at like lawyers to laymen's.
Yes.
Yeah, and that's not a good thing. So I'm glad that you're.
Well, it's not only lawyers, but laborers.
Right.
Because there are a lot of things that the buyers expect the realtor to do that's really not a part of their job description.
Right.
But in this market, and this takes us into a whole nother conversation, but in this market, because things are a little slow, things are a little tight, remember the real estate agent only gets paid when the deal
is
funds.
Right.
Not closes, funds.
Yeah. Yes.
And the lender only gets paid when the deal funds. So a lot of times they are apt to go above and beyond what's really a part of their natural role just to make sure that the deal funds.
Yeah.
And sometimes, guys, to be honest, deals close that are not necessarily in favor of our customer, but we'll get into that.
Yeah, because I tease, and a lot of people feel like, and this is why. Let me back up. People need to go through the Home Buyers Coaching Club, because in the process you will feel like that the lender is asking you for everything but your blood type. Right. And you might even feel like if you have a rare blood type, that might get you in the door, but that's not the case, right? It's like, I got a rare blood type, I'm special, give me this loan. So the Home Buyers Coaching Club really does help provide clarity through the process, because we move quickly. When you get up in a contract, you got 30 days to close.
Exactly.
So if you're wondering why we're asking for your paycheck stub again, that could delay things. And you're wondering why we're asking for a bank statement again, or if you're wondering why we're asking you for your non-purchasing spouse's information because you live in a community property state, that can delay things, and we've had a lot of scenarios during our tenure where, I don't remember the one where, yeah. So just to name a few, and if they had taken the class through the classes through Home Buyers Coaching Club, that probably could have alleviated some of those things. So one of the ones that I think comes to mind was the one where the gentleman was still married. And he didn't tell us. And we found out he was married. So he was emailing me, and he was like, okay, well, if I reach out to my wife and get her to remember that? That I'm buying a house with my girlfriend.
Wife?
Girlfriend? Wife, girlfriend. He was like, okay, so if I get my wife to okay it, are you guys going to be okay with it? And I'm like, okay, well, as long as your wife is okay with us pulling her credit, and she's going to have to sign the deed of trust, and your girlfriend is going to have to be okay that your wife's going to sign the deed of trust and be on title with you guys.
50% ownership in the property.
I was going
that part.
I was going to joke and ask the fellas back there. It sounded like he was big pimping, huh? Yeah, I got the wife, I got the girlfriend on this deal. You know what I'm saying?
Right, there's no confusion there, right?
Everybody clear. We all clear. What they say, all hearts and minds clear.
Yeah. Right. Yeah. But if they had took these classes, and that's really what the Home Buyers Coaching Club is, we all like to feel like we're adults and we got it all figured out, and everybody's gone through YouTube University and everybody's gone through Google University. But the benefit to Home Buyers Coaching Club is that you're going to get that personal touch.
Right. That's one of the biggest things, because not only do you get to have the education, which you can choose to just do the self-directed education path on your own with only education. You can also take a step up and have the dedicated coach. Now that is the most popular program, and that's the one that we really recommend, because this is where it gets personal.
Right.
Because what your aunt went through and your broke Uncle Joe,
I like you said broke Uncle Joe.
Broke Uncle Joe didn't get a chance to have, and what their opinions are about the process and what happened doesn't necessarily apply to you. Your broke Uncle Joe probably had a 400 credit score, and that is a big determining factor on the difficulty of what his process was. Your Aunt Sue, she may have had a 800 credit score, which made her process a whole lot different. So you have to find out what your situation is and let us personalize and create the plan that is made just for you.
And the big part is that if you do start the process, this is this little shameless plug, but if you start the process with Kiss Wealth now, you're going to get a soft pull.
Yep.
And so it's not going to affect the credit score, but there's many lenders out there. And so Home Buyers Coaching Club is not just for Kiss Wealth now. They work with every lender, but the big part is that if you do know that you want to go through the Home Buyers Coaching Club, you definitely want to get that soft pull. So that way it doesn't affect the credit score.
Right.
And then you're able to know exactly and create that journey that you want to go on, so that way you can get to the table.
Exactly, because what we have is experienced coaches that are going to work with you one-on-one, and we're going to do, first of all, what we call the AAA. AAA means assessment, then action plan, and then accountability. So your assessment, it actually mirrors the mortgage process. We're going to look at your credit. We're going to look at your debt to income ratio. We're going to look at what kind of money you have in the bank. We're going to look at everything that is required for you to qualify based on where you are now and what it's going to take for you to qualify. We're going to do a written action plan. And this is the key: accountability. And we know, think of it like a personal trainer for your mortgage journey, because we know that if you decide that you want to lose 20 pounds, you can't just decide you're going to lose 20 pounds. And then all of a sudden you wake up tomorrow and boom, 20 pounds are gone. You can't just decide I'm going to lose 20 pounds because I'm going to just stop eating rice.
Right.
And all of a sudden you stop eating rice and 20 pounds are gone. Doesn't happen like that. You need a personal trainer. And it's not that the trainer cooks for you, shops for you, or works out for you, but they hold you accountable to the goals that you set.
Exactly.
And what psychologists say, and what is factual, is that you are going to be more accountable to someone outside of yourself than you are to yourself.
Yeah.
How many times have you ever said to yourself, I'm going to get up at 7:00. I'm going to get here at 7:00. And you just don't make it. And what is the accountability in not doing it? Because who's holding you responsible? Who's holding you accountable? Who's giving you any kind of punishment, so to speak, for not doing it?
Not keeping up. Yeah.
You're not going to do yourself.
Yeah.
But it's something about not wanting to disappoint, or not wanting to not show up 100% for that coach. So a lot of times that coach is that accountability factor is what makes the difference.
Right.
So
go ahead.
I was just going to say, holding someone accountable or allowing yourself to be held accountable.
That's the key.
Yes. And most people will only allow themselves to be held accountable by someone they have some measure of trust with.
Yeah.
It doesn't have to be a lot, but they got to have some measure of trust with them. So how do you approach that so that you can be in a position of accountability? So For
I said the many years of experience. That's why they need to trust.
many years of experience. But one of the biggest things, JR, is the fact that people have to recognize that they don't know what they don't know. And when they don't know, you have to then allow someone that does know to guide you down the path. If you're going down a path with your eyes closed and you have to depend on someone to take you there because you don't know where you're going, you've got to trust that the person that's leading you has been down this path before.
Right.
And that's exactly what we do. We have coaches that have years of experience in the industry. We, like myself, we are dual licensed, like Charlamagne, we're dual licensed, meaning we have licenses on the real estate side of the table as well as on the mortgage lending side of the table. Like myself, I've also been a licensed mortgage broker. I'm also a certified homebuyer education specialist. I've sat at every seat at the table. True. I've been a buyer. I've been a seller. I've been a lender. I've been a investor.
Yes.
I've bought personal homes. I've bought investment homes. I've been a landlord. I've been a buy and flip. I've been a buy and hold. I mean, I've sat at every seat at the table. So it gives me, I think, a little bit of a unique perspective on what every person around the table is thinking. So it helps me to understand where people are in their journey. And I understand especially how to help them navigate and understand what the person on the other side of the table is thinking.
Right.
Okay. So, and how to give somebody, so I'm gonna beat her to it.
Okay.
Giving old so-and-so like me out there in our audience, encouragement to come get some coaching and buy a house.
Are you ready to move forward? Are you ready to, and let me say it like this, because this is what one of the big things that we want to encourage and tell people right now. The market is tough right now. It's tough right now. The interest rates are high and people's money is low. But we all need to own something.
Yes.
I heard you the other day on Facebook talking about legacy.
Oh, yes.
So critically important, because you have to be able to know that you're leaving something behind that can generationally live beyond you. Like they say, will your great grandchildren even know your name?
That's true.
And most of the time they don't know your name.
They don't, because they didn't
leave them
right.
anything.
And what I've been like doing my numbers on right now and been trying to slowly leading into it is because I had a person who had $88,000 in their 401k, and they were like, "Oh, I can't touch it." And I said, "Okay, I understand that, but understand that at the rate that you are putting your money into your 401k, and yes, they're matching, your home is going to appreciate up to 5% every year. Your 401k is not going to do that. So even if you take a small amount out and do it as a loan, so you're not penalized." Do that loan. Now you're able to pay yourself back. And now you're able to have this property that's going to make money for you. So now you have two investments. You have your 401k that's being traded by the company and on Wall Street.
And a real asset.
And right. And then your other asset that is going to appreciate in value. So now you have two investments working for your good to help you for your retirement. So when that time comes, maybe you want to sell the house and you take that cash and put it in another account that you can take payments from monthly, or maybe you do a reverse mortgage and then you don't have a house payment. You still own the home and you have life insurance. So when I had that conversation with her, she was like, I didn't think about it like that.
And you know what you just said, Charlamagne, is now really the answer to your question, JR, why we need to look at this seriously, because in our community, most people don't have $88,000 in a 401k. Most people don't have $8,000 in a savings account.
Right.
So what is it that we have the ability to create as an asset for ourselves most readily?
Is real estate. All day,
so
every day.
This is why, because now from a platform of ownership, from a platform of it being a appreciating asset, now you can begin to build something for yourself using a plan similar to what Charlamagne said. And now not only is it a legacy for yourself, but it's a life legacy for you. because
Right.
now you have something. If you only have $800 in your savings account and you get sick, but you own a home that has $20,000 or $25,000 worth of equity in it, no, you can't go knock on the wall and say, "Hey, I need to pull out 20,000."
Like out of the silent savings.
But there are
There's an option. There's programs
that will allow you to get those funds out, and now that's your money that you can use for whatever you need.
And think about it this way too. Let's say, let's go back to you get sick, you only have $800 in the bank and you own a home. Well, now you can even talk to your bank about doing a modification or a forbearance for your mortgage. Your landlord ain't trying to hear that.
Or cash out.
Oh yeah, or cash. So there are so many more options for you to make a way, even if it's delayed, with home ownership.
Exactly.
And so, which is just not there through renting. So, but if a person wants to buy a home, and let's say they don't have a 401k, home buying coaching club is going to talk to them about down payment assistance. Because there are so many other ways to achieve home ownership without any savings.
Well, let's talk about down payment assistance so that people understand. First of all, guys,
my specialty.
People need to understand that down payment. Now, she's on one side and I'm on the other side of the table, but just understanding from an education perspective, down payment assistance is not free.
It's not. No.
and the key as it relates to down payment assistance being accessible is you have to be able to qualify. So even though it's not free, you still have to qualify to be able to have access to those funds. Mm-hmm. So down payment assistance is available as low as a 600 credit score, but you have to be in a position to still qualify as it relates to income, as it relates to your employment. I mean, all the things you still have to be able to qualify.
And even with a 600 credit score, or even in some instances with the city program, you can even go lower than that, y'all. It's imperative, which I'm gonna make a video about that tomorrow. It's imperative that things that are household related that you have in your name. So do not have your lights in. I know, right? We can talk about this. If your lights are in whose name? Let's pick a person.
Your kid.
Your kid's name. Okay.
The one that's 10.
Right. Or let's say the cell phone.
I got a bill in the mail.
Right.
I got credit.
Yeah,
I don't even know how to drive.
Right, exactly. Or your cell phone bill is in your side piece's name. Because people come with pieces.
They do.
Well, how many pieces they come with? People come with pieces, and the pieces they come with. So it's important that even if your credit is not strong, understanding that, and just with the Home Buyers Coaching Club we'll talk about, there are alternative ways to get you into a home if you pay your rent on time, and your rent is in your name, and your light bill's in your name, water bill, cell phone, car insurance thing, and those are credits.
These are the exact types of things and scenarios that the Home Buyers Coaching Club is designed for, because as people come with their pieces,
I know, right?
All the pieces
with their parts.
We are able to then take those pieces and look at them ahead of time, because this is what happens in a traditional scenario. People get excited about purchasing a home. They tell mom, they tell grandma, they tell sister, they tell best friend, and they say, "Oh, I'm going to buy a house. I'm going to have a house. We're going to have a party." And all of this is before they've even talked to anyone about what it's going to take for them to qualify for the house. So instead of doing that, come and see us at the Home Buyers Coaching Club. Let us do an assessment. Let us give you an action plan. Let us hold you accountable so that we can get you where you want to be in time enough for you to be able to have that celebration and not be embarrassed when they say, "When's the party? Where's the open house? When are we going to do it?" And you're just kind of sitting there, quietly. So what we're telling you is let's get ahead of it. We say no before you go.
Yes.
No before you go.
Even no before you go see Charlemagne.
Yeah.
Because once you go to see Charlemagne, you know how long it would take her to actually get you pre-qualified to purchase a home?
I've
2 hours and 32 minutes.
I've seen her sit on the phone. I've seen her sit on the phone with doing just that with a lot of people. And you talked about going above and beyond.
Oh, yeah.
Yeah.
Like how many times
we want to give her a little bit more of her life back.
Yeah, we want to give her and those like her a little bit of her life back.
Because we have a loan like that right now with, if the person had taken the Homebuyers Coaching Club, she would have understood what a community property state means for the state of Texas.
Yes.
And so, and let's talk about that for a moment.
Let's talk about that.
Because
in the state of Texas, guys, if you are married, whether you have been separated or not living together for the last 10 years, whether he lives in California and you live in Texas and you have separate residences and you live with separate people, in the state of Texas, you are still married. You are not a little bit married, you are very married. Just like you're not a little bit pregnant, you're all the way pregnant. It is what it is.
So you is or you ain't?
You is or you ain't. Which means that if your credit score is not in a level that will allow you to access or qualify for a conventional loan, because you have FHA, you have VA, which is for veterans, the veterans, and then you have conventional financing. FHA is government back. So the government has rules, regulations that apply to the loans that they are going to back. Conventional is more private. It's private to the bank that's lending the money. So that bank makes their own rules. FHA is more lenient on credit, but they're more stricter on the house, because they kind of know in their mind, and I hate to say it like this, but they know in their mind that the possibility of default is real. Because the credit is not as good, and when you default, who gets the house back? They do. So they want to make sure that when they get the house back, that they have that they have an asset that they can sell to get the money that they gave you back. So conventional is stricter on the person,
right?
And more lenient on the house. So the leniency, the strictness on the person allows you to be able to qualify independent of your spouse.
I have a serious question for the Homebuyers Coaching Club. How does the Homebuyers Coaching Club view co-signing?
I say that you want to guard your credit. I say protect your credit like you protect your kids.
So would you co-sign for your kids?
Protect your credit like you protect your kids. Again, so you're going to keep your kids away from anything that could be harmful to them, right? So you're going to protect your credit and keep it away from anything that's harmful to it. If someone needs a co-signer, it means that there's a reason that the lender does not see them as a credible risk alone.
So, but what if they have a good heart? I mean, these are valid questions, right?
They are, and I think there are questions that need to be asked.
Dad, have you ever co-signed for me?
No.
So if I asked you to, would you?
Well,
that's a kid. Protect your credit like you protect your kids.
Well, actually, I would give Charlamagne's character some. I would put them on the table.
He got. I would.
And so let me bring it back to.
Well, I want to know. This is important to our relationship.
Well, this is the question. These are the questions that you want to ask if you're going to consider co-signing.
I want to know if my dad loves me.
Love and money don't coexist.
Hey, what did Tina say? Love got to do with it.
Exactly. So the issue is this. When you go to a lender, the lender has specific requirements, because remember, they don't know you. They don't know your character. They don't know your story. They don't know anything about you. Everything is documentable.
Right.
So everything is put out on the table. And just like we always say that your credit report is your financial resume.
Right.
So whenever you go for a job, whenever you go to get credit, whenever you go to get a loan, they don't know who you are. They just asking you to present your financial resume. And we can tell a lot about a person from their financial resume.
We can.
Your resume tells us a lot.
Yeah, we can see your eating habits, your shopping habits, the habits that you should have that you don't have. No.
We know if you're a liar.
That's true.
We know if you're a cheater.
That's right.
We know if you're a thief.
Wait.
That's true.
Wait. I gotta ask for the lay people in the audience. So my financial resume
is your credit
tells
report.
You if I'm a cheater and if
liar.
I'm a liar
or a thief.
Now, right. I gotta ask, how does my financial resume tell you if I am a liar,
somebody in the back says they have.
or if
They
I'm
want
a
to
thief,
say.
or what else?
Real easy. If I look at your financial resume, which is your credit report, and I see late payments, you lie. Because when I gave you credit, you promised to pay me X amount of money on time every month in exchange for that unmerited favor that I extended to you, which was credit.
Okay.
So if you don't pay me on time, but you said you would, you lied.
So if I got a financial resume of 15 years and I got 2 late payments on it,
You lied 2 times.
okay. Well, I can live with that.
I could probably live with that too.
Yeah, you know what I'm saying.
But there are people who come to the table with a significant amount of evidence
But yes.
that shows that they are lying.
And there are people who actually apply for mortgages and are currently past due on their house and currently past due on their car payment
And credit cards.
and credit cards. And we'd be like, okay. So sometimes the reality and is not there for the individual, you know, and they know that they're late, but they're thinking that the credit reporting agency is not going to show us that.
They're going to tell the truth.
They're not going to tell the truth. And when she talked about being for a cheater, so I remember that one lady who we had this lady and her husband, they applied for a loan, and she wrote me a long email saying that it appears that they're not on the same path because he had a bank account that she didn't know about, and he had credit cards that she didn't know about. And so that created a definite wedge, and they had to reassess their future because of that, you know. So
it created a wedge that she knew about.
Right, yeah.
And so resume will tell it all.
Yeah, and as they say, what's done in the dark will come to light. And that being said, you know, if you're going to, not like we're trying to give advice on how to not tell the truth, but if you're going to go into financial endeavors while you have a lot going on, it's maybe not a smart thing. Or if you're going to do it, maybe you should have somebody co-sign. Back to co-sign.
Back to the co-sign.
Back to the co-sign. But seriously, for a moment, if I were because I have co-signed for one of my children to my chagrin. So
to your chagrin.
Yes.
It was not me.
Yeah, no, it wasn't.
And so
you.
now I'm not eligible for that same option.
She gonna kill me.
I just want to know if all the kids get the same options for childhood.
Every child is supposed
Well,
to be treated equally.
Well, and I was going to address
so
that.
one child messing up.
I was going to address that because what I learned during that period was that I have to treat each of my children differently. There was 2 of my children I would let borrow my car. Mm-hmm. One of my children never drove any of my cars, ever. Mm-hmm. And I learned, and ever, never. Okay. And I'm just saying that I treated them differently because of the content of their character was different. Mm-hmm. And that's why I responded earlier that because of your character, I would have to consider the cosign question.
But now do understand. Let's bring it back to the real world. A lender is not looking at character.
No.
They're looking at credit.
Yes, they are.
And again,
I wish I liked the
credit report. It is because again, like we just talked about, your financial resume is also a character reference. You had asked, how do I know that you are a liar? It's usually because of your late payments.
Okay.
How do I know that you're a thief? It's your charge-offs.
Okay. So
if you purchase a item,
and you don't pay for it, and no charge off, you're not paying for it.
Right. So that means that I have again extended you credit, which is unmerited favor, which is grace, because you said that you would pay me back at this time, at this amount for this item, but you never did. And then you got your kids answering the phone saying, "My mama ain't home." My mama ain't home.
Right.
Mama,
I know.
You're not home.
And that goes back to, bad things do happen to good people, right? And so, and over, and time heals everything, right? Yes. So over time, a person can rebound from those things. But
and
it's
we can help them
right.
with
We
that
can.
As well.
But one thing that the audience needs to know is that the lender, whomever you're applying to for credit, you can tell them your story. You could say that, you got a car for your baby daddy, your baby mama, and they drove off with it into the sunset with somebody else. Those things do not matter when it comes to FICO score and history. So sometimes, and this kind of goes back to the Home Buyers Coaching Club, they can help you with credit restoration.
Correct.
Meaning, if there are, because at the end of the day, those, improprieties, those things that happen to you that you are, happen or that didn't happen and you didn't approve of it, if the actual credit extender made some mistakes on the reporting, those things can be removed.
Exactly.
So sometimes the companies make mistakes on your behalf and those accounts can be removed. So this is just, it's just a conversation about the credit.
Right. And no doesn't mean never. It just means not now.
Yeah.
And
now
we've had people where their situation would be out of the realm of impossibility if they just would relax, sit back, and give it 3 months.
Right.
Because time is the healer, so to speak.
Yes.
So if they have been 2 years removed from something and they've got 3 more months before it hits 2 years, let's just pull back, relax. Let's do some things actively within those 3 months to put you in a better position. So when that particular item no longer has an impact, you'll be better prepared to qualify. But that's where coming to us and having a coach to really look at your full picture can help you create something.
And a coach is so important, especially if a person's had a bankruptcy, or if they've had a foreclosure, right? There's some credit instances that definitely you can buy a home with a bankruptcy.
None of those things will keep you from ever owning.
Yeah, you can own. Like, you don't remember that one loan that we did where the guy, he had a bankruptcy and a foreclosure within 12 months, and we got him closed. You remember that deal?
What do they call it?
A miracle.
Mitigating circumstances.
Mitigating. So he had mitigating circumstances. And I was able to show those to help him get closed on his loan.
And then this is the key, guys. Documentation trumps conversation.
And
if you have those kind of circumstances that have really impacted your credit and you're able to work with a coach that can help you document, because everything is about documentation. Yes. You can show where you had a heart attack or you had heart surgery and you were out of work or you lost the eye. Remember that one?
Yeah.
And you
broke your neck.
We had that one too. You've got medical records. You've got all of the things that support the story. Then it's not out of the realm of impossibility that you can own a home, but don't just come and say that,
I'm here.
You mean I can't just come in and break out my violin and
right.
The stories.
Yeah. And you be like, okay, let me just, hold on. I'll be right back. Just keep that. No, because it's right. Because a lot of time, and people, and y'all, like, it may take you it'll take you literally 30 days to I hate to say, to have a credit blemish, right? Because you have 30 days before you're late. So you could take you 30 days to really make an impact of your credit so bad to where it's going to drop your scores. So being on the phone with the lender, trying to explain it and getting mad at the lender for what you've done doesn't help your situation.
One of the other things too is that people don't always tell the truth.
That's true too.
They don't?
Just like Charlamagne said a few minutes ago, that it was only after we were into the process that the wife automatically just kind of popped up in conversation. And it was like, wife, wait a minute, you never said anything about a wife, because that changes the whole dynamic of the process.
Right.
Well, pimps don't explain.
Ooh, right. Well, here's the thing, you guys. But I just thought about something. So one thing that the Home Buyers Coaching Club is going to help with is that the lender only knows what you tell them, and then you have to document what you tell them. So if you're applying for this credit to be extended to you, you can see your credit profile with 20/20 vision. Understand that when you call us, we can't see anything. Bad joke, but we're blind to the situation. We can't see anything. So it's only when you start peeling off the veils, then we're able to see what's going on. So a lot of people assume that we know it all. Oh, you know how much I get paid? No, we don't. You know how many kids I have? No, we don't. You know how long we work? No, we don't. You know how much I make? No, we don't. It's nothing can be assumed.
Right. And then
that's the biggest thing.
The thing about coming to us, because a lot of times people are afraid to divulge the full story to the lender because they feel like if the lender knows, then they're going to maybe, turn them down or not want to work with them. When you come to a coach, we're an independent third party. We don't work for the lender. We don't work for the seller. We don't work for the agent. We work for you. We have a fiduciary responsibility to you as your coach. So you can have a personal and very confidential relationship with your coach to tell us everything. And because of our expertise, we're going to be able to guide you as to what you need to do based on the information that you have shared into the mortgage readiness process.
So how do I say? Oh, go ahead. I'm sorry.
No, I'm sorry. I just know from what I do, there's a lot of young brown and black young men out there that are being released from incarceration. And so do lenders look at a person that has been incarcerated differently?
We don't look at them necessarily differently, but because of the work history requirement that are on loans, you having to have a 2-year work history, then we would look at that, look at how long they were incarcerated, look at what they did before incarceration. Did they have a 2-year work history prior to the time that they were incarcerated? And sometimes, like I said, it's about creating a plan, an action plan. They may have to get a job. They may have to work for 6 months, 8 months, maybe 12 months to get that mark, get those scores up so that we don't have to have the 2 years. Maybe we can go off of the 12 months. Sometimes they have to do.
Especially they've done school. Like if they've done school while
they've done school while they were incarcerated. Sometimes they're doing
and that counts.
Self-employment things. We need to work with them on understanding how to file their taxes correctly so that we could use that as additional income. So sometimes, and believe it or not, those who are incarcerated have a better opportunity to find housing that is more up to standard through ownership.
And I'm going to say, so if you are, you've got you're no longer incarcerated, you're out, you go to work for 6 months, you did some type of training while you're incarcerated, or I like to say on vacation. And then you work prior to those it's actually easier for someone to get in who's been incarcerated to buy a home versus someone who has a whole bunch of credit bumps and bruises, because guess what, where you lived at was documented, your rent was paid, you don't have late rent payments. I mean, it's so much easier for someone. And
it's someone who goes that has been incarcerated that's trying to rent, that goes against them, right? So we don't look at that at all in our world.
At all. So how does someone contact the Homebuyers Coaching Club? We've been given all this information about how supportive the Homebuyers Coaching Club is, but how does one get in contact with you? Like, what's the process?
Well, the Homebuyers Coaching Club is an online membership platform. So you just go to homebuyers.coaching.com. That's www.homebuyers.coaching.com. All of the information you need to join the membership, the courses, everything is there on the website. And Kids Wealth Now is becoming one of our branded partners. So very soon you'll be able to go to homebuyercoachingclub.com/Kids Wealth Now, and you'll be able to go through through Kids Wealth Now, which will automatically connect you to Kids Wealth Now
and connect you to those like the extra $1,000 too.
$1,000 that you can get as a closing cost benefit.
Yes.
So we want you to come to homebuyercoachingclub.com so that we can give you give you a little information. If you go to the website, go to contact us, you can also do a free discovery call.
Across the screen.
So that way you will be able to reach out to us. We can have a 15-minute, what we call discovery call, and you can ask any question that you want to be able to understand where you are, how we can help you, and how we might be able to benefit you in your particular situation.
And so with the Homebuyers Coaching Club, helping someone out and making sure they get to the end. If they come in and they say, look, you've helped me, I want you to help my cousin, sister, brother, that would help the whole family. Are there benefits? Are there savings to bringing multiple people in, or how it went,
We love you.
Okay. All right. No, that's I just asked a question.
We
Love you for your help.
Love you. But the thing about it is that, and even on a broader spectrum, guys, is that we have to, as a community, begin to recognize the benefit that ownership brings to our community. It's not just about owning a home. It's about building a legacy. It's about providing some stability for your family, stability for generations to come. Recognizing that our kids can't be what they ain't seen.
That's right.
If they ain't never seen nobody in their family own a home, guess what? They're going to always think that renting someone else's home. I heard this the other day and it just hit me like a ton of bricks. You are already a homeowner. You just bought the home for somebody else.
That's true.
Well, that's true. That's what renting is.
Yeah.
You just bought the home for somebody else.
That's true. They
get all the benefits.
They don't write you a letter and saying, thank you for paying off my house. Thank you for sending my kids to college. Thanks for sending me on vacation. Thanks for being my retirement gift. Yeah.
That hit me like a ton of bricks when I heard that. It's like, wow. And if more people would understand and internalize that, we would be able to really make some changes as it relates to people really getting serious about ownership and mortgage readiness.
And last, but and the biggest thing with home ownership and why we're so passionate about it, y'all, is that owning a home is truly an asset that you can leverage. There are so many things you can do with that, and you can't do it while you're renting. You can't go to the bank with the lease and be like, I've been leasing for 15 years.
Right.
Doesn't matter. But if you go to the bank with a mortgage, a home you own, you got equity. You can do so many things.
One of the other things too that's important about engaging with the Home Buyers Coaching Club is now you know that you're asking questions of someone that has the real answer. Because a lot of times you don't know where the information is coming from, and don't know what their perspective is or what their experience is. And now you know that you are dealing with someone who has expertise in this area, looking at your personal situation, and our goal is to put you in a position to purchase.
All right, so Home Buyers
Coaching
Club.com.
And I know that for myself, having been a renter, I own now, but having been a renter, the thing that I heard people complain about the most was how fast the rent was going up. And so, you can kibosh that, really, really easy, by if you're in a mortgage, most of them are fixed, and you're not going to have the landlord went up with the rent $200, and so it's really hard. The clock on the wall says that we don't have to go home, but we got to get
out of here.
Out of here.
Right.
So, Andrea, thank you so much. Thank you for coming. Thank you for sharing.
Thank you.
And and because this is information people need to have. On the
right. And we got to have you come back because
absolutely.
I would love for the audience to, if they have questions, I'm pretty sure they do, reach out again. And then but if they want, I know we have the Home Buyers coaching.com. And then is there a Facebook page, for the people who like to do that?
Home Buyers Coaching Club.
Okay. So everything's Home Buyers Coaching Club. So Facebook, you can go to the website. So many ways to get in contact with her. So thank you again.
Thank you for having me. I enjoyed it.
Yep. And we will be back next Wednesday. Same facts time, same facts channel. Until then,
love yourself. Take care of your credit so you can love yourself, and somebody else maybe can co-sign. Just teasing.
You done got me in trouble.
I'll coach you out of it.
Okay. I'll coach you out of it.
I'll coach you out of it.
We'll see y'all next Wednesday. Thanks. Thanks for hanging out with us.
Guys.
Hey, this is Charlie.
This is JR.
Host of Speaking the Facts with Charlie and JR. Broadcasting live each week on Wednesday at 7 p.m. from Fishbowl Studios.
Log on to hear us Speaking the Facts on current events, family, and finances.
So be sure to log on each week on Wednesday at 7 p.m. to catch